Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, June 25th, 2026. It's 9:59 a.m. Eastern Times. I'm starting the video, so I wanted to get one out to you early. I started noticing some very odd irregularities in the pre-market session today. Um, and I want to just maintain what I've been saying for the last few days here that I think the risk of a crash type scenario is very likely. So I'm gonna issue that probably a couple weeks ago. I told you I think it was time to bump back up to the market crash watch. I did an extensive video I've posted in the past about it. I use the same scale that the NOAA does, the National Oceanic Administrative Association. I think that's what it stands for, or the National Weather Service. That's the one I should have used. NWS. With tornadoes, they do flood, tornadoes, hurricanes, extreme weather events. A watch is defined as something, keep an eye out. The risk is starting to build, but it's not imminent. When they move it up to a warning, a hurricane warning, then the odds of a direct hit or a near direct hit in the very near future are pretty high, very significant. That's when you need to really take action. So, look, at this point, financials are holding up, so we'll just keep it on a warning. And again, semantics, really do what you want with it. But I'm just again noticing a lot of irregularities in the market. As you know, I very multifaceted in the things I watch. I watch kind of obscure sectors, niche sectors, things other people aren't watching, different pockets within the financials. I look at credit spreads almost on a daily basis, all these things. And what I've noticed is just the very unusual market breadth. For a while there, for last couple of years, all it was being talked about is how the Mag 8, Magnificent Seven, the largest big tech companies, were doing all the lifting in the stock market, attributing to the bulk, the majority of the gains coming from just 8 stocks. Well, they've all peaked, as I've highlighted, and now we've seen it even narrower breadth. Remember, big tech kind of does a little of everything. For example, Alphabet, one of the biggest out there, Google's parent company, they make their own chips now. They have their Pixel phones, and they got out from underneath. Um, I think Apple's making their own chips. So are they considered chip companies? No, but do they make chips and have exposure to that sector? Yes, and of course, some of them are even categorized as communications company in the sectors. They're trying to, you can't check a solid box, but nobody's going to argue that they're not tech companies at the end of the day. So they're all big tech companies, but and usually they have been for years the driver of the market. And as I've covered in the past, when they've done that for an extended period of time, where you've seen the stark outperformance of those big names, those big mega cap names that have almost single handedly lifted the index, but then they peaked out. And as I've showed you in recent videos, they've all peaked out a while ago. What's happened is a subsector of technology, the semiconductors, the pure play semis, have picked up the baton. And basically, so what you're seeing is, the talk again, I'm not the only one that's been pointing out the narrow breadth in the market and tech. And again, I'm speaking bigger picture now for the last couple of years, but that's been well documented all over the media and everywhere else. But what I'm noticing now is you're seeing even further narrowing constriction in just the semis. Let me show you a screenshot I took this morning. Here, let me see if I can pull that up for you. Okay, hopefully this works. I know you can't see it complete, but I have a method I came up with many years ago, in fact, decades ago, when I started using this charting platform. Back in that day, I was always striving to find indicators that didn't exist that I wanted, and I came up with a way to find real-time market breadth, advancers versus decliners in any sector, any ETF. Because back in the day, you could get, it was, depending on the feed you had, it was either lagged. with an hour or more lag time on the update and you had the big index, you had the S&P 500, sometimes a NASDAQ composite on certain platforms. Again, you had to, I use multiple charting platforms. They all have their pros and cons, but you couldn't get it on the NASDAQ 100, and you most certainly couldn't get it on individual sectors like semis. So what I came up with is just take a watch list. Let me show you how I do it, and I'll zoom in. I know you can't see that. Let me go back to QQQ, for example. I'm going to take my little slider box here. Here's the holdings of QQQ. I typically keep them sorted by market cap because the big ones are the ones that move the market. And again, I've noticed this underperformance of the big Mag 8. I've covered it with you that they've all peaked months back, and yet the market. And again, like I said, I want to say that can be spun as a healthy thing at times when you see market breadth start to expand out, and then some of those, the big tech haven't crashed or anything like that. They just stopped going up. And then when the market holds up and it's at or near new all-time highs, that means then you have some other sectors participating, and that's what I've been hunting for you guys. That's where we've, started finding, obscure things like the packaged food stocks that I've been on repeatedly with updates. We've had a lot of them hit our, one or more price targets. And they're boring. Who wants to buy Hormel Foods or or Kraft Heinz? Well, I do, because I don't chase bubbles. There was no clear, there's been really no objective entry points, and the charts are really flashing some warning signs in the semis. So I've been looking elsewhere. In big tech, like I said, there's trading opportunities, but basically, let me show you what I do with my the way to find real-time market breadth. You just go to the percentage gainers or loser right here, this column, and if I click, it's going to sort. You can see SanDisk is the best performing stock, up 12%. Hopefully you can see that. And then Micron at 10, Applied Materials at 4.8, Western Digital at 4, and so forth and so on. So what I do is I scroll down to the last one positive. It's in real time, so it's clicking. So I click there. And then at the very bottom here, I'll have to move this down just a bit for you to see it. I'll read it. You probably can't see it in the video. It says 67 of 101 items are green right now. So that is an improvement from this morning. Let me show you what I saw this morning. And again, very unusual. So I'm going to wait and see how the day finishes. I'll be honest with you, very eager to see how the semis finished this week, as I have showed you in recent videos. And as I said, the week was still young. As of yesterday, we had a bearish engulfing candle building or forming on the weekly, but that means literally nothing. It means literally less than zero until 4 o'clock Friday, especially in that sector, which is very volatile. So they could easily save it, because a weekly candle is not finalized till 4 p.m. on Friday. And anything that happens midweek means literally, to me, less than nothing. You have to have that, if you're trading or analyzing that time frame, then you need to see the Friday candle, whether it's a support or resistance level breakout, a trend line breakout. Again, intra-week breaks on the weekly time frame do not mean anything to me. If I'm trading on the daily time frame, sure, you get a daily close above or below, then that matters. All right, so let me go and show you what things look like this morning. And again, this is quite unusual, very unusual. So I'm going to zoom in here. And you can see this was in pre-market. I took it at about an hour before the market opened. And literally right here, so I clicked on Honeywell, and it tells me 36 out of 101. You get 101 because Alphabet has two share classes, GOG and GOGL. L is the class B or class A share, one of them class. Either way, you have the two share classes. And of that, so again, 1/3, only 1/3 were positive, 2/3 were negative, which is, and yet the thing is, I should have screenshotted. QQQ was up over 2% at that point, well over 2%. And this is very unusual. All of them, almost all of them. I'm going to read them here for you real quick. Here, I'll zoom in a little bit so you can see even better. Micron pre-market was up 17%, SanDisk 15%, Western Digital. Look, I know what happened. I know Micron, blew it away last night. I know the trend, but that's like saying your neighbor, next door neighbor, just won the lottery, so you're going to go out and buy a brand new $250,000 Ferrari. In other words, yeah, I get the correlation that they're in the same sector, but they all have different business models and um, unique circumstances to each company. And so this broad-based thing was number one, a massive short covering rally, but to see all the other semis, and look again, I'm going through the Nasdaq 100. So look what was driving it this morning. These are all chip makers, chip and or you know related with the AI bubble trade. Western Digital's in there. They make drives and things like that. Um, Qualcomm, ARM, Applied Materials. They make the equipment that makes the chips. Lam Research, Intel, KLAC, another chip equipment maker, ASML, again, Marvel, AMD, Microchip Technologies, ADI, Texas Instruments. So again, almost every single one. There's our strategy. I still, my thoughts on strategy. That happened to be one in strategy, kind of carrying a risk on. So that was it. And then you go down the line and you can see there were almost that big pre-market move was almost exclusively related to one tiny, well, not tiny, but a subsector of tech. Again, I haven't seen that very often, and to me, if not a red flag, it's a yellow flag. Okay, so that was then. This is now. Let's look at the semis and see what happened. And again, this is, what it is a lot of, it reeks of the retail trader, getting foaming at the mouth because of the Micron beat. And let's just go through what happened. Let's just go to a 1 minute chart here. Let me move this little thing down here. I'm going to go to a 1 minute chart. We're just going to go through the components, put them by market cap over here. And you can see what happened. They were bid up. Here, let me turn on the pre-market edit chart properties, pre and post data. Always show the last two sessions. So here's NVIDIA, as if Micron's beat had anything to do with NVIDIA, but they bid it up anyways. And, 5% of that, those gains up until the open were faded right away. Taiwan Semi, again, Taiwan Semi, was no news to them, but they had a huge move up, 5% fade so far. Broadcom. So this is I always say, I use the analogy when a company reports earnings or there's a big Fed meeting. I always tell you, don't read too much into the after hours moves. In earnings, you have three components. You have the initial earnings release. A stock will rip one way or the other, rip or dip, depending on the initial numbers. Then comes a conference call, and blowout quarter can be faded. The big pop can be faded quickly when if the CEO gets on the call and gives bad forward guidance or says something the market doesn't like. And that's why I tell you, take with a grain of salt, but more so, it's the realm of the retail trader, the Robinhood trader, that's trading in after hours actively. Big institutions, big multi-billion-dollar hedge funds and pension funds and all that, they don't have the room to maneuver in the relatively illiquid after-hour session. So the starters, I like to say, those are the bench warmers playing in after hours. The starters step onto the field at 8:30 in the morning, and that's what counts. So far, they're selling that. And look, the semis, a lot of them are still up, and there's Micron still up, but so far it was an overreaction, and 10% of the gains have been wiped out, nearly half of them. And I just wanted to show you, there's AMD. AMD sold down about 8% so far this morning. These are 1 minute charts. Here, you can get a quick look. There's the semis. So they were all bright green this morning, solid green, each and every one when I pulled up SOXX. Now you can see about half of them are already turned red. And again, it just shows it's mania in this market right now. I'm not going to say like I haven't seen before. I've lived through plenty of bubbles. I lived through the dot-com bubble. As I've said repeatedly, thank God I didn't short stocks then. I was a stockbroker, financial advisor. And it was after that bear market that started to really pique my interest in learning about short selling and chart reading and all that good stuff. And I mean, I wish I would been an adept short seller at the top of the dot-com bubble, but at least was able to recognize it for what it was back then as a bubble and not get wiped out in it. And that's what I've been focused on now. I've been getting boring blue chip dividend paying beat down bottoming plays, insurance companies. We just had Progressive hit our price target. I got that one out today. It hit it yesterday, the day before. And on that one, remember, guys, I give you multiple targets. I pulled these out just to be safe before we got there, because in the last update, remember, we bought Progressive somewhere down here. I think it was at the bottom of the wedge. I think it was on, yeah, it was on long-term support. Just want to talk on that one. So when I bought, there's a lot more potential. There's a big breakout on a bullish falling wedge on the weekly. And so we went long this one on price and trendline support. So it's an example where we got in before the breakout even. And now it's taken out the 200s. I thought we'd get a reaction at the 200s because it came in with price resistance, but now we're clearly above it. So what I'd say on this one, there's nothing wrong with letting it ride. Out of caution, I removed these targets in a recent video, but now that we're above there, it clears the way it opens the door to T2 or even T3 being hit. And when I look at the weekly chart, possibly more, because remember, this wasn't just a divergent low on a daily chart. It's what it looks like. That's all you see here on the daily chart. That's all I see. But remember when I covered this in a video first and shared the trade idea, I even gave you the chart. Here, let me pull it up. And that was back on April 17th. The chart I gave you in the update today was just the daily, but when I posted the trade idea, and again, all you have to do is go to that post today. I'll show you how to find the archives. That was it on the weekly. So we bought it there on the trend line, and that would project a lot higher. But again, to me, if what I think is about to happen in this market happens, everything's going to get dragged down. Beautiful breakouts like this, this is a textbook breakout. This is a stock in a bull market that for the first time since 2023 has pulled back to its primary bull market uptrend line, right? So that would project in a regular bull market, this thing's going to new highs. It has double to triple digit gain potential. But if the semis implode, tech implodes, it's going to take the whole thing down with it. Remember, live by the fangs or Mag 8, die by the Mag 8. That's my motto. They took the market up to where it was. And if the semis break, it's going to tell us that the tech AI bubble is breaking, that big tech, big tech's already, been soft lately. And again, that may be healthy consolidation. You can be a glass half full guy or gal and say, yeah, it's healthy consolidation. They were a little overbought, got ahead of themselves. So we're seeing sector rotation. They'll consolidate, take a breather, and then have another leg up. That's the glass half full approach, optimist. Glass half empty says something's wrong because the Mag 8, those stocks have peaked. Every time they start to rally, even off divergent lows, they get sold into. It looks like they may have peaked. And prior bull market tops happened with the same exact thing. When the leaders died, you sometimes get that last gasp in the market. I covered it back a couple months ago. There's a term, the medical term for it is terminal lucidity. And that's when a terminal patient who has no chance of recovering is, on the final stages, been going downhill. And then they have that last moment with family, friends, where all of a sudden, it seems like they've gotten better. They're more alert. Pain's gone down. They're talking and smiling, and you think they're getting better, but the doctors will warn you of it. A condition known as terminal lucidity, where everything appears to get better right at the end, right before the end, and then shortly after that moment, they pass away. And so I've seen that in the market too. This whole, and what I'm speaking to, guys, is the sector rotation where other things are picking up the horns. However, it's not healthy sector rotation. I'm not going to go into there now because I want to keep this video relatively short, but I've covered quite a bit, and even this week, my custom NASDAQ Hindenburg indicator, and whether, again, I haven't heard anybody talk about that indicator in years. And mine's a variation of the original Hindenburg indicator, just mapping over all the NASDAQ breadth indicators and all that. But the crux of it's the same thing. We all know this isn't rocket science. Anybody that's studied technical analysis and the markets, understands the importance of breadth. A healthy market has broad participation. When the stock market is at new highs, 52 or all-time highs, 52-week highs, the majority of stocks should be doing well. They don't all have to be at new highs. They're not all going to be at new highs at any point in time, but at least the majority should be over their 50-day and 200-day moving averages, which they have not been, and they haven't been in a very long time. So again, this what we're seeing is we went from a market that narrow breadth to even narrower. My Hindenburg's been firing almost on a daily basis, which is rare. The criteria, and it's a pretty rigid set of criteria. I've gone over it before. You have to have like 4 or 5, I think 5 check boxes, and you rarely get those signals. And you want to look for it in clusters. And again, it's based off market breadth. So that's what I wanted to show you, and I did show you kind of what's going on with the semis. And look, and maybe I'm wrong. Maybe there's no big drop in the semis or QQQ coming. And you know me, and I continue to just try to impress this because I get the comments every now and then, and I truly feel bad for those that load everything up in Bitcoin, MSTZ, or short. That's the 2-time short strategy ETF, or just shorting strategy, or shorting QQQ or the semis, and they put everything in there. And again, I always say, when you lay all your bets, it's like going to the casino and putting it all on red 16 or whatever. I don't play roulette, but I understand the concept of black, red, the numbers, and then the zeros, double zeros. But that's the same thing. You can put all your chips on one number, and you're going to have a very high payout if you put it all in red 16 or whatever. I don't know if 16 is red or black. I honestly don't know, because it's a game I wouldn't play. I don't ever play a game where that I have a 100% guarantee that the odds are against me when you put the money on the roulette wheel. If you didn't have the green, the zero, double zero, and my kids were informing me when I was talking about that game recently, how some casinos even have a third or a fourth zero, triple or quadruple, which just takes the odds away. In other words, if it was just black and red and you bet black, red, you're betting 50-50 chance, but that's what the zeros do. They put the odds in the favor of the casino. So to me, the life of me, I never understand why people would go and play a game where, statistically speaking, the odds are against you. You're going to roll enough. You roll enough times, you're going to come to those. I don't know. Maybe it goes back to my days in business school, college. Taking statistics and learning about that. And it's like, why put the odds against you? But anyways, I guess whatever. Teach their own. All right, so while I was on Progress, I just had a price alert trigger on this one today. This must be a trade idea I shared with you recently, and we're right on the trend line. We haven't broken it. Sometimes every time I get a price alert, I'm going to look closely. Okay, have we taken out the trend line? No, but remember, Progressive has moved and it's taken out the first target, the 200. I'm going to put a line right here, and I'm giving you a trade idea. If you're new to the site, I'm going to repeat this because I do all the time. 90+% of the trade ideas I share on right side of the chart. When you go to the completed trade archives or the active trade, they're not going to be there. When I do a video, I'll cover dozens of stocks, and many times, like yesterday, for example, I covered gold mining, silver gold, mining stocks, one in particular, individual name, SNWGF. I covered the markets. I covered a lot of different things. And so just due to the archiving system, all those ticker symbols are going to be assigned to that video, but they're all in different categories. Some trade ideas were long, some were short, some were setups, some were active trades. So I just want you to know they're not going to make it when you look under the trade ideas. Long, short, those are specifically categorized. Those are the single posts when I take the time to screenshot a trade, list targets. So this one would have been covered. And the way to find it, you just go here. So TRUP. If I listed targets, maybe I listed targets and I didn't share it. I'll tell you how to find things on the site right now. You just go to, you Click on resources right here. A lot of good stuff. I love this tools of the trade section. I'm always checking these earnings calendar, economic calendar. Down here, select a symbol tag. So TRUP. Honest to God, I don't remember last time if I. So it must have been in a video or I was marking it up. Maybe I didn't share with you. So if I did that right, let me try it one more time. Sometimes you get a click. You can do it this way. You can scroll down as well or type in the symbol TRUP. So no, all right, you're getting a new trade idea. And remember, birds of a feather, right, guys? Birds of a feather flock together. So, oh, I didn't go down far enough. Sitting here talking TRUP. Yep, sure did. Yep, 5/8, May 8th. So there it is, May 8th. Let's see if I did a AI summary. Nope, but I'm starting to get the AI summaries in that have the timestamps. So yeah, so May 8th. Anyway, there it is. So it was covered here. There's a downtrend line. Now you have nice price resistance. So there's your breakout. If we can break much above 24.37, you want to call it 24.50. All the better if you get a solid move through there. Big intraday move on volume. Breakouts that occur on above average volume. 1.5 times or better. The 90-day average volume is what you want to see ideally. You can see I have indicators up here. There's the average 90-day volume is about 410,000 shares a day. So the way you do that, if you want to see, if it's right now it's 10:30 in the morning. So you take there's 6.5 trading hours in a day. All right. So you would take the current volume, which is 32,000, and you multiply that by 6.5, and then you divide that, and that give you multiply that by 6.5, and that would give you right there what if it annualizes out at that throughout the day, if that makes sense, that would give you your daily volume. And is that going to be over 410,000? Now, the thing about that is you also have to remember, and I'm just kind of doing my little scrolling thing, I'm sidebarring. Volume looks like a smile. When I'm talking about intraday volume, when you go to a stock, you go to a 1-minute chart. I'll pick something. Let's go to QQQ. That's a very liquid traded instrument. And let's turn my volume bars up so you can see them real quick. Or we can go even to a 5-minute chart. You can probably see it clear. We'll turn the volume bars up, turn everything else off, just to make an example here, and edit that. There you go. Let's turn off other things. So these are, hopefully you can see my daybreak lines. I have them very subtle, but that's it right there. There's another daybreak line. That means end of trading. You can see from the gaps too, right? So this is what I mean by a smile. Volume's always highest in the morning, peaks around lunchtime typically, and then spikes up at the end of the day. There's another smile. That was actually 2 days, guys. I messed that up. There's your smile right there. There's your smile yesterday, right? So it's highest in the morning, troughs off around lunchtime. Traders, everyone's out at lunch, and then it picks back up towards the end of the day. Mutual funds, ETFs, they're squaring positions. Positions are being closed out by day traders, et cetera, et cetera, et cetera. So keep that in mind. So you kind of have to kind of play around with it a little, but that's what I do. In other words, again, breakouts that occur on low or average or volume have a much higher rate of failure than those that occur on above average. And again, I like to use at least 1.5 times or greater. So back to the one I was just talking about, TRUP. That's what you'd want to look for. You'd want to take the volume, and if you're going to take the breakout intraday, you want to see that volume coming in, because low volume breakouts, you probably just see it close back below the level. And you can also wait for a solid daily close above. That's a better bet. But what happens sometimes when things break out, they can run, and if you wait to the end of the day, you've already missed an objective entry point. You're already halfway, sometimes all the way to my price targets in a single day. So either way, there's a trade idea for you. And you see I already had it marked up from the last video I did, your targets, to give you an idea. And it's also in the insurance sector, which again, we just closed our progressive trade. This is assurance. I'm just clicking some of the other ones that are related to this one. There's different types of insurance, guys. These are the specialty insurance companies. This is another one I already gave you. This is an active trade. Ryan Holdings. So we've got a couple there. Coming up on my first target, their second target. And the second target's going to come in with the 200-day moving averages, and that's still a potential. Meaning, unless I cancel and tell you that's official, this is the final official target right there. All right. Now, you may want to hold out for more, just like Progressive and some of the other ones. What was the other? We had one of our packaged food stocks hit price target today. It was HRL. And like I said, there's nothing wrong if you want to hold out and try to, this one could easily go up to that trend line, especially now that it's went above T3. T3 is very good resistance, but the day is still young. I'll tell you, I took profitable profits on this one today. Remember, it was one of my favorite picks. Highlighted. It was highlighted right here. Then I've been on these like white on rice and updates, and I gave you that downtrend line wedge. And then it broke out. The breakout was about where I highlighted first anyway, so that's why I reported the same gain, whether you took it on the 16th when I did the video right here, or you took it on the breakout. It's about your same gain. Now, the way I view this is, you know, it's a lot of times what I'll do in these situations is just set a stop, a tight stop, and let it ride. That way I'm giving back very little profit if it does fail here. But I see a reaction high right here that it hasn't cleared yet. And the way I look at this, when I closed it out, we were a little bit above the line. So I made a little more than the 27 or whatever percent profit. But that's about another not even 4% to the downtrend line. So am I going to risk 4%? Try to squeeze another 4% out of a trade I made almost 30 when I can risk by doing that, I'll probably have to go home with it, meaning, it's probably not going to hit it today. And let's say the market gaps down or this stock gaps down, a big gap down. That would bypass my stop, and that stop then does me no good because stops will be bypassed on an opening gap. All right. So that's my thought process. And I took just about every one of those stocks that I did in that April 16th video. The ones that I told you, there were some that I told you were my favorites, like this one that stood out. And then others that were, a little more, and some were more aggressive. But I did that because I have a little bit heavy exposure, but I'm starting to take profits there and reel some in. But, there's still momentum in that sector. I just updated as recent as yesterday, and some of these other ones have a lot more meat on the bone. General Mills and Hormel hit, JBS, MKC, McCormick needs to pop this $50 level right there, and it's going to run. This is your next target up here. Again, these were all highlighted back here, so you can call that T1 that we're at, whatever you want. It would have been covered in that video as well. T2. And, just to come back, let's for kicks and, well, it's not kicks and giggles. It's not semantics at all. This is in a bear market. The stock is falling. A lot of these are, and that's why I like them. To me, they're the opposite of the semis, except these are blue chip stocks. They're beat down. They're paying dividends. So even if I sit here for a year and go nowhere, I'm collecting about, on average, 5% or better. This one's kicking out, where is it? 4. You can't see it. It's just to the right of the screen. 4% dividend yield. But all I'm calling for is, a lot of these, just probably another test. Every bear market, just like a bull market, you come back and you test 200s when you get too far above them. In a bear market, when you get too far below, especially blue chips, there's about a 0% probability of McCormick filing a unexpected bankruptcy filing. The ones that you have to watch out for are those, high flyers that I gave you, like Beyond Meat, the cheap ones. And there was one other one, but, the upside potential is huge. We already hit them both for, high double-digit gains. Okay, let me get just back on topic, and let's just see how we end the day. SXD is one of the, this is the more diversified of the two semi ETFs. Here's those weekly candles. SXD, again, I would call that or compare it closer to being the S&P 500, if you will, for lack of a better term, of the semiconductor sectors, based on the fact it's just much more diversified. It has all the big semis in there. It's just the holdings, they don't concentrate. They have a lot more. They have 43 holdings. And the biggest position, again, back on January, was Micron at about a little over 3%. So you can see very equal weightings across all the holdings, where SOXX is very concentrated. Reminds me more of the NASDAQ 100 compared to the S&P 500, where the top weighted ones really rule the roost, and there's your weightings there, and there's only 30 holdings. So either way, I am very eager to see how the week finishes. Despite Micron's blowout quarter, and it's still up as I speak, it's up 11% on the day, which is healthy. But look, that bearish engulfing candle is still very much intact. So now we still have almost two full trading days left in the week. And it is possible to stick save. Means if this candle, if the semis do rally and can get back above, they have to get back above this level right here, the body of last week's candle. Otherwise, where we're at now or any more downside by the close Friday, we'll have a bearish engulfing candle on the weekly. And not just that, we'll also have closed below this primary uptrend line, or the minor kind of blow off top trend line, whatever you want to call it, that steep advance. The semis were in a nice uptrend, and then they just went, it's not vertical, but it's a very steep slope. And so that would be a double sell signal. It would be a bearish engulfing candlestick sell signal on the weekly, and a weekly close below this trend line. And then XSD already broke below its comparable trend line. Remember, it's more diversified. You just have a bigger weighting, and that Micron's holding up, and a couple of those top names are holding up the SOXX a little more. But this was a sell signal right here. Now we went on to make about an equal high there, but now we have a nice fat bearish engulfing candle. Just to put it in perspective, XSD from where we're trading right now as I speak, we'd have to go up at least 7%, and that's to the bottom of it, and close somewhere about 7-8% to negate or undo or prevent this bearish engulfing candle from finalizing on the weekly. And remember, we're already below trend. This was our breakdown here. But why haven't the semis dropped on that breakdown? Well, because they're not all broken down. As I told you in recent videos, collectively, you want to see the majority of these guys break down. And you can see some are still above trend. Taiwan Semi. I'm on a weekly chart here. There's a big megaphone pattern on Broadcom. A megaphone pattern is this right here. It's also known as a broadening wedge pattern. And we're right there in the middle of it. Micron still above trend. So once Micron breaks, ASML is right now below the trend line on the weekly. So unless it can stick save, that's going to be AMD. I'm sorry, AMD, another big one. Let me go back here, give you the full chart. That's it, guys. So this one, I'd have to move that trend line like that. Bearish engulfing candle, that's ASML. Intel, remember on the daily, showed you we had this trading range recently right here. That box breakout, we failed the breakout, and so far we're back still down below it, but not by much. Like I told you recently, if you have to squint to see it, give it the benefit of the doubt. We're just basically back testing. We've been moving sideways for about a week, and as I said in recent videos, Intel needs to break this trend line. And if it does, my expectation based on experience, when you have a failed breakout of a well-defined trading range like this, it's a fairly quick, almost unidirectional drop to the bottom and then down below the range. And so that's still my expectation for Intel. Or they come in and buy it, and these guys keep going up, and guess what? I'll lose some money on my semi shorts. I don't have a full position. It's not an all in until we get those breaks of the additional ones that I'm telling you about. That's right now we're getting some early signs, but we've had that before. The more that break down, the higher probability, and then the more aggressively I'll engage that sector. But meanwhile, Yeah, any day the semis are, that position's going against me recently, then other things like insurance companies or packaged foods or wheat and corn, they're going up, or sugar, those still looking good as well. Um, and as I told you yesterday, and somebody asked, let me just go there, make sure I haven't missed any comments before I wrap the video up. Yeah, about gold and silver and the metals. So I took started to take a position. Where was it? I just replied to somebody on that. I guess it was back here, but not a full position. I'm scaling into the metals and miners. That's it right here. Somebody asked about GDX, and yeah, it's not like I said, because I did the video yesterday. I told you I can see the potential for a little more downside. We're at the top of my kind of support target zones, and I see about maybe 6% downside, but I don't want to miss it. So I took some starter positions, and they're doing okay. And that SWNGF that we just hit support, that one I'll give you bounce targets on. I already covered it yesterday. I told you can bounce it back. So we're almost to the trend line. We're a hair above it, positive divergence, and your stops would be somewhat below there. And you game it, you can bounce it back up to as much as this trend line. I'll just have to see how the charts develop, and including but not limited to the U.S. dollar index. That's one thing I'm watching very closely. I told you that we hit my 185 target, and I expected a pullback, and that's what's happened. And that's so far, it's not much, but it's given gold. I think gold and silver, last I looked, were about flat. Gold's up a little bit, I think. Yeah, up about 1%. And remember, right to the bottom of my third target zone. So support. And if it wants to break that support, you have primary uptrend line support not far below. All right, let's wrap it up here. And I'm going to continue to hunt for some new trade ideas. And that's it until we get some really solid sell signals on both the market and the semis. It's just a good idea to spread your bets among different asset classes, different sectors. Really like what I'm seeing in strategy now that we're clearly below my first target, and I just can't wait to see these divergences get burned out. And then, um, like I said, this has the potential to be a monster trade if it plays out. All the way down to my final target. And again, I think it's going to have ripple effects throughout the stock market because Bitcoin has its tentacles intertwined in everything in the financial systems. Like I said, the banks went all in, the brokerage firms, Wall Street went in on it, and it's everywhere. It's throughout hedge funds, pension plans. Not huge exposures. I looked it up. Pension. I don't think there's any pension fund that's loaded up. 25, 30%. They're usually relatively small positions, but it's also a psychological blow. And I know the retail traders all in. Retail traders are all over. Have been all over Bitcoin for a while. So anyway, those are the things I like. All right, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.